Ladies and gentlemen, good morning. For those of you who I had the good fortune of meeting yesterday in the workshops, welcome again to an additional session. This is intended to be an introduction to the challenges, opportunities, and subtleties of collecting in individual countries, in this case, the United States. One of the very fortunate aspects of buying and selling with American partners is that virtually everything you need to know about initiating the transaction, memorializing it in a documentary form, identifying those aspects, the choice of law, the potential for an arbitration clause, other aspects of the transaction that you use to measure the quality of the products being purchased or the items being sold, are generally open and available over the internet. We have the Uniform Commercial Code that guides transactions that originate in the United States. And if you are selling to an American partner and attempting to collect for products sold or services rendered, you need to understand very clearly how securitization occurs, what you can do in the event of bankruptcy. And again, the Uniform Commercial Code is that document. Now, we are entering into a challenging period. For those of you who are unaware, we have a new president. Let's just say that for the business community, the agina, the ulcers are growing geometrically with every passing day. That instability and lack of understanding of the direction that our economy will take is impeding your ability to trade and collect with American partners. However, I've had discussions with colleagues here who are doing it, attempting to collect in European countries with great difficulty because it lacks the discipline, the ability to understand very clearly, step by step, what is required to collect. In the States, you will generally not find that as a challenge. If you sell, terms are on the document of sale. If you follow the discipline of a time series and your collection folks pick up the phone and confirm the receipt of the order, particularly for large items. Once the order is accepted into the system, is received, the information relative to the invoice goes to Treasury. You should receive your payment within terms. If you fail to share terms of sale with your American partner, I guarantee you a delay. Make sure they understand, if you're selling net 45, that on the 45th day, the expectation is that your money is in-house. That almost guarantees you payment within 50 days. It's just the way the process works administratively. Now, challenges that you're going to meet over the next short term. Certainly, lack of landscape stability. Regulations are changing, which affects capital availability in markets, which affects credit lines and the ability of your American partners to pay your bill. If you are told that the invoice payment will be delayed, make sure you take the next step. Ask the magic question. And why is that the case? As much as we would like to think on the other side of the pond that we are perfectly structured with a discipline that enables us to make sure that we sell, we collect, and we pay our bills on a regular basis, not many companies have the highest degree of discipline. Ask the questions. Why is it not possible? Well, we don't seem to be converting our invoices to cash fast enough. Why do you think that is? You may have a better, more disciplined process here than your American partner from whom you're trying to collect your invoice. Start engaging, start the dialogue. Anything that you can do to help them understand what they're doing wrong will come back to you as they share that later on down the line. Capital availability for company operation will be stressed in the U.S. So watch your trade receivables as those past due numbers start riding out for your portfolio of American clients. Get engaged in these customers. Understand what's happening and why. It will affect your ability to convert your invoices to cash. There are opportunities. Americans are known to be relationship builders. We like to understand who we're dealing with. If you have a particular payables office in the US that you're dealing with a company, take the time to understand a little bit about with whom you're having the dialogue, particularly if it's a regular assigned person on a regular basis. Understand where the birthdays are. Now we have social technology that enables us to communicate offline out of the system through LinkedIn or whatever the most available item is. Use it. Use it to engage, to build. Redirect the focus of your collection effort to the relationship building side. The more stressful the cash situation becomes, the more differentiating. You're going to hear about China. One of the most engaging things about China, you establish the relationship, build it across time. You can use that as a universal application trait. Engage with those people that are most important to you and create a relationship that builds. Communication will be better. Your opportunity to convert invoices to cash will improve significantly. Should somebody have difficulty with your taking this approach, one of the things that you need to mention is that your accounts receivable trial balance line is what shows up in your financial statements. The degree of integrity of your accounts receivable, the more of the invoice activity that is pushed towards the front end, current 1 to 30, the better the perception of the reputational capital of your company, the lower will be your cost of debt, the more highly probable you will have increased profits and increased revenue. If you're a public company, it goes right to your stock price. And for every company, it goes to your cost and your ability to access capital. So if you have a question or two, I'd be happy to take it, but it's a fairly simple environment and everything is available to you to look at. Google Trade Collections United States and virtually everything will fall right into your realm of reading and responsibility. Yes, sir.
Can you hear me okay?
Sure.
So, can you talk a little bit about preference actions? Because I feel like in Europe they probably don't understand.
Preference in bankruptcy.
Yeah, so there's no reference.
Yeah, the U.S. bankruptcy code is relatively highly involved. And if you have a transaction that you wish to secure against any other claims that might occur against it, the Uniform Commercial Code creates a document called the UCC Form 1 in which you register your company, the product with great specificity, the products that you will ordinarily sell to this client. And I stress that a second time. Make sure if you add important products a year from now, 2 years from now, that you update your UCC Form 1. It's filed with the Secretary of State. In the environment in which the contract is formed, it gives you protection for 5 years. Now, protection in what form? All right. When a bankruptcy occurs, a line falls and the federal government becomes the trustee for that particular client. It assembles all of its resources. If it's going into a wind down situation where they're liquidating the firm, it's important because you will find yourself in a portfolio of preferred customers who will share in the first distributions of capital. The entire bankruptcy program itself has as an objective equitable distribution of assets, which means everybody gets something. The preference action that our colleague has referenced allows you to go into a portfolio that is more preferential than any of the others. So if you have if you have to participate in an unsecured creditors committee, your ordinary take will be 7 to 12 cents on the dollar. If you have a preferred filing which allows you access to the largest portion of the capital, it generally runs between 60 and 70%. Well worth your while to pursue. If in your companies you have in your credit department somebody who's particularly astute, you should identify them as a key person to learn for the major countries you do business what aspects of debt processing, what aspects of bankruptcy law apply so that they can quickly be invoked in the event that a bankruptcy occurs. Okay? By the way, we talked about the Runway 180 program. In that program, for specific countries, on demand by the area in which the courses are being given, we pull down these transactions. You'll see if you're doing business with the US in a major way in Poland, then in the Journeyman program, you will have the document. This is a UCC Form 1. If you have business in the US, this is how you complete it, and this is where you file it for this customer in this location. It's one of the values that ACC is now bringing to the table, which you will drive. You tell us what you need with great specificity, and in the programs that we offer and in the conferences in the upcoming years, you will have those answers given by subject matter experts and operational people who are in the field, in the practice. I would also lead you to the website. The EuroConnectNet group of attorneys has provided 2 books. One basically identifies the debt collection requirements for specific countries, very well detailed and understandable by the ordinary person, which is very unusual for lawyers. And the other, of course, is on exactly the securitization, retention of title aspects, and the UCC Form 1 is, in fact, the US version of the retention of title clause. So again, you have information at your disposal. Take the initiative, engage with the books, and go forward with it. Any more questions?
Any questions? We do at the very end when all the guys have spoken. Okay, so thank you very much.